And now for something completely different.
It's a rich man's world.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it is a Monday as we start, today is the last day of February, which means tomorrow's the first day of March, starting a whole new month. And that has a few things that come with it as well, of course, with, beginning rebalancing of portfolios. 2 negative months in markets, of course, has been very tough on investors so far. Not surprisingly, though, a lot of this recent angst by what's going on in Russia. We're going to get into some of those stories this morning. Headlines, though, this morning is that there are some initial setups here for some peace talks between Ukraine and Russia. We'll see how that works out. There's very low expectations of anything coming out of that. But we'll see. This morning, futures are opening a lot lower. Not so much on on Russian news specifically, but basically on the sanctions on Russia, removing Russia from SWIFT. This potentially has implications for a lot of things, from commodities to oil prices to financial stability, etc. One thing that we had talked about last week in particular was, would this increase in geopolitical risk, and of course the markets themselves sliding. We've had the largest drawdown in the market since 2020 so far. Will that actually cause the Federal Reserve to kind of step back on their tightening program, right? So here we are in a position where you have a lot of geopolitical risk going on. Markets are already under pressure. And now you're going to talk about tightening monetary policy at potentially absolutely the worst possible time. So the question now is going to be, and what markets are starting to price in, is that the Fed won't be as aggressive as was originally expected. They were expecting a 50 basis point hike at mid-month in March. It's now down to 25 basis point hike. The question now is does the Fed actually come out and say, you know what, we're just going to hold off on rate hikes for another month or two until our next meeting and just see how this stuff kind of sorts itself out in Russia. So again, there's a lot of things to consider here. And one of the things that we saw a lot last week, investors making a lot of panic-based decisions early in the week based on this news coming out of Russia. And look, I certainly understand this, but I had a lot of phone calls through. It's like, get me out of the markets because, this whole thing, the whole world's coming to an end. I get it. And then on Thursday and Friday, you had a very, very strong counter trend rally, which we've been talking about since early week. That we were oversold here, 3 standard deviations below the mean, very oversold and due for a reflexive rally. Saw that on Friday. And we use that to reduce equity exposure just a tad more. And again, something we've been doing all along here on these counter trend rallies, reducing risk, adding hedges, etc. So again, just that same process that we've been talking about, continuing that here. One thing to pay attention to, of course, as we talk about this, is commodity prices. Now, oil prices up sharply this morning, up over about $4 because of this removal of Russia from SWIFT. Again, has implications also. OPEC Plus coming out this morning saying they're not really going to increase production very much here. They're going to really kind of stick to their production targets for right now. That means less supply on the global market. So oil prices are jumping here. But again, as we're coming back up this morning, we're basically only back to where we were just a few days ago. So again, we had talked about last week also that we had written an article for Market Watch talking about potentially, is it time to start taking some profits out of energy stocks? And that has really kind of been the situation here. Oil stocks have been kind of lagging here recently. Oil prices really kind of stuck here to topping process. Now, importantly, commodity prices in general have had the biggest surge since really 1973 on a total return basis. Now, why is that important? Huge surges in commodity prices are actually economically depressing, right? Because the best cure for high prices is high prices, because the higher prices go, eventually you're going to impact consumption. That's recessionary in nature. When you have a recessionary slowing economy, that is deflationary. That ultimately brings prices down. So again, oil prices here, they are going to rally this morning on this news about SWIFT, but importantly, they are very overbought. They are on currently a sell signal. And again, we've just kind of been topping in here just as of late, not really going much of anywhere. So we'll see how this kind of plays out today. Gold prices, of course, also kind of playing into the same mix and kind of look a lot the same way. Actually, that's the wrong chart. Here we go. So back to gold prices. This is going to be one of those things. Also, gold here, very large move, very overbought here. Again, just like oil price. Again, they look very similar here to what's going on, but these are inflationary in nature. And so you're seeing a lot of that kind of risk-off work in these specific areas of commodity prices. And again, this is kind of what you would expect. A lot of geopolitical risk, people immediately rush into commodities, but that's had a big run already. So again, we talked about before about making one-sided bets into markets, being overly exuberant about one thing. When there is a resolution to what's happening in Russia, and there will be a resolution, this is not going to evolve into the Third World War here. This is going to get resolved in one form or another. When that does, you're going to see a depression in a lot of these commodity prices, just on a reversal of those fears. Bitcoin also is another area that has not really worked out as expected. Bitcoin was supposed to be the kind of risk-off environment. It was supposed to be the replacement for gold. Remember all these stories? It really hasn't. Bitcoin and cryptocurrencies in general continue to vastly underperform. And this is one of those things that we had talked about last year, is that this is a speculative asset in nature. And if there was ever an opportunity for Bitcoin to shine itself, it should be today. It should be the fact that when we're coming off of SWIFT and pulling one of the major players in the world off of SWIFT, and that has a potential to create a Lehman type event in terms of financial liquidity through banks. It has that potential. This should be the risk off asset of choice, and it's not. So again, that just kind of really tells you that this asset has really just been more of a speculative asset. It trades very closely to the NASDAQ in terms of bullish and bearish nature. And again, we've got a lot of bearish nature right now in markets. What we're going to do this morning is we're going to go through some of these headlines, kind of sort through some different things relating to what's happening in Russia, of course, and how this ultimately kind of focuses back onto the financial markets as well as the economy here in the U.S. Things are slowing economically fairly quickly underneath the surface. And as we continue to move out further into this year, more deflationary pressures are going to start to stack up here. And this is actually going to exacerbate that problem for the economy going forward. Again, the more risk that we have, higher prices, those type of things. It seems counterintuitive, but as I said, high prices are a cure for high prices. Again, high prices in the short term for commodity prices, and yes, definitely enjoy that trade while it lasts, but don't get locked into that trade long term, because commodities are very cyclical in nature, and as high prices impact consumer spending, impact growth, that is going to start to create deflationary pressures and less demand. Remember, particularly when it comes to commodities, it's all about supply and demand, and when supply starts to outstrip demand, and that's occurring, right? Fracking is coming up. The number of wells being fracked are going up. In fact, right now, frackers can't find enough sand to frack. So, they're out there fracking as fast as they can right now to create supply, but that's because you have a lot of demand at the moment. Now, as that liquidity surge that we had go through the economy reverses, now as we move further in this year, all that liquidity that we put into the economy, that $5 trillion worth of checks to households where people went out and bought new cars and new appliances and new lawnmowers and riding lawnmowers for their apartment complex, all those type of things. I mean, if you got money and you've got a 2 square foot yard, why not? That is going to all start to reverse itself later this year. Less demand, more supply, lower prices. That's just the way it works economically. We'll come back. We'll talk a lot more about Russia this morning, markets, your money, and things we've got coming up this week. Don't go away. I'm your host, Lance Roberts, for The Real Investment Show.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
FAFSA. It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual lunch and learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next lunch and learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back this morning. I'm Roseland Roberts, of course, as always, as we kind of dig through the latest breaking news as it's impacting markets, economy, your money. You know, lots of concern here, of course, with markets this morning. Futures are going to open down roughly about 400 points. Now, they were a lot worse overnight. When the EU acted to remove Russia from SWIFT, that causes a lot of concern through the financial markets, and immediately the Dow was down about 600 points. Now, it's recovered some this morning, but there's still concern over this particular sanction because this has the potential to impact financial transactions, again, around the world. Brent asked me off the break, he said, can you explain what SWIFT is? SWIFT is the Society for Worldwide Interbank Financial Communications, telecommunications. That's what SWIFT stands for. To make this simple, it's kind of like the WhatsApp for banks. It allows them to send secure communications between international banks in particular. Now, you don't use SWIFT here in the U.S. I was explaining this to my wife last night. She was asking me the same question. You don't use SWIFT in the U.S., right? So you go down to the bank. So let's say Brent goes down to the bank this morning and he wants to wire money to his brother in New York, right? So he doesn't really have a brother in New York, but just saying this. Yeah, just example. So he wants to wire money to his brother in New York. By the way, I saw the Facebook post of your son, Adam, came down to the studio to see you?
Yes.
Yeah?
Yeah.
Was he very impressed with your new digs?
Oh, yes. Yeah, he'd seen it before. He just hadn't seen the updates.
Gotcha. So, yeah. He's very tall.
He is. He is not
He did not get it from your side
challenged.
He did not get it from your side of the family.
It's from his mother's side.
Got it.
Yeah.
Okay.
He got all of his good stuff from her.
Mom.
Actually, from me, because she still has hers.
Gotcha.
Yeah.
Gotcha. So anyway, so Brent wants to send money to, let's just use real life person. He wants to send money to Adam. So he goes down to the bank and says, I'm going to wire money to Adam. And the bank says, yes, sir, no problem. And they send a electronic transfer of money between banks. That's it, right? You do not use SWIFT domestically. Now, if Adam is in the UK, as an example, and wants to wire money over there, that's where SWIFT becomes involved. And what SWIFT does is simply, and again, and as I said, it's kind of like a WhatsApp of bank communications. It's simply a secure communication between banks that says, hey, there's money coming. This is who it came from. This is what it's for. This is for the account. This is blah, 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 blah. It just explains everything about the transaction so that the receiving bank knows exactly what's happening, where this money's coming from, what's it's for, etc. So it just facilitates the transfer of assets between banks. That just kind of it's more complicated than this, but it's a very important system. The takeaway from this, it's a critically important system for banks to interact globally in the financial system. And it has the ability to impact and disrupt the financial market operations, particularly with a country the size of Russia. Let's talk about Lehman for a second. I was sitting in my apartment. You have to remember when Lehman occurred back in 2008, I'm sitting in an apartment because I had sold my house and I was waiting to close on my new house. And Hurricane Ike hits Houston, Texas. So we're all hunkered down in the middle of this hurricane, and I'm watching the news headlines, and Lehman files for bankruptcy Saturday morning. So what? Lehman filed for bankruptcy. It's just a bank, just an investment bank at that, just a brokerage firm. What's the big deal? The next morning, you can't do financial transactions. The entire financial market is completely seized up. Now, why is that? What did Lehman have to do with that? Lehman's bankruptcy didn't have anything to do with the seizing up of the financial markets. What I mean by that is just because they filed bankruptcy, that's not what caused the problem. What caused the problem in 2008 was when they filed for bankruptcy, everybody goes, I don't trust any of you players, right? I'm not doing business with anybody until we sort this out. And so all of a sudden, it wasn't just Credit Suisse wouldn't do business with Lehman. They wouldn't do business with anybody. So the entire financial system just literally froze up. Nobody trusts. It was called counterparty risk. Nobody trusted their counterparties that they were doing business with, and that's what caused the financial system problem. And they just caused the whole financial system just to freeze up at that point. So nobody could transact any business, and that's why the market just went straight down for like 3 days after that. Now, removing Russia from SWIFT is not the same as the event that occurred with Lehman, but it has some of the same impacts, is that now you've removed a major player in the global community of financial transactions, right? Because again, Russia is a huge provider of energy and oil, etc. So all of a sudden, there's a cramp in the system, and the risk to the markets and why the markets are down. I'm just explaining why the markets are down this morning. The risk to the markets is they're not quite sure what implication that's going to have on financial liquidity in markets globally, commodity prices, etc., commodity transactions. So that's why markets are down this morning on this news. And again, it's going to try to sort itself out, but markets are going to open down. Dow's down about 300 points right now. Their futures are improving, by the way. Again, down a whole lot more. Now, the fact that we're having some talks between Russia and Ukraine this morning is encouraging. There's, again, not high hopes that much will come out of this. There's a 3-mile-long convoy heading towards Ukraine right now in Russia. So, nobody's standing down at this point to have talks. Right? But it is helping futures improve here a bit. Now, here's my whole point about all of this. Markets are very oversold. We talked about this last week. We said use reflexive rallies to sell into. We're in the middle of this kind of unknown territory in terms of geopolitical risk right now. And I know that the first inclination is to simply go, I'm going to just sell everything and go to cash. Right, just get me out. The problem with that is that markets adjust for these events. The question is the speed at which they adjust, but they tend to start to factor in these events fairly quickly, and particularly with sentiment extremely bearish, particularly after and particularly with markets still very oversold. You've got the kind of the breadth, the number of stocks above the 50-day moving average, the number of stocks above the 200-day moving average at very, very low levels, normally at levels more associated with market bottoms than tops. You've got an administration that is making bad decisions on many fronts. Again, we should be increasing oil production here as fast as we can, but we have an administration that's stopping that from happening, which means that we're very dependent upon Russian oil, but now we can't get Russian oil. This is going to potentially, and this is another reason why oil is up this morning. So there's a lot of concerns that certainly would want to make one go, just get me out. But you have to counterbalance that psychology, right? That's emotion. That's unknown. And when something is unknown, that makes us very emotional. And we tend to make kind of knee-jerk reactions to that. Go back to your investment discipline. Look at where the technicals are. Look at where the markets are. Make some judgments about the amount of risk you're taking in your portfolio. I'm not saying that you shouldn't reduce risk. We've been reducing risk for 2 months here, right? Adding short positions, reducing our equity exposure, adding bonds. We've been doing that for the last 2 months. We've been building hedges in as this market's been kind of gyrating, but we're still have money exposed to markets because, again, markets are very, very oversold here short term. So, and the problem for most individuals is they tend to run out of markets and then they don't get back in until far too late. So it's always about, as we've talked about before, it's always about a game of inches. Just make small changes and adjust. Make small changes and adjust. Make small changes and adjust. Just kind of watch, make changes and then watch what happens. Then make some more changes and, watch what happens. But again, as markets evolve, and this is what's going to happen, is that something will happen in Russia, and one morning you'll wake up and news headlines will be that Russia withdraws from Ukraine and markets are going to be up 3-4%. That's just how markets act. Now, are we out of the woods at that point? No, we still have the Fed to deal with. As we've said before, this is going to be a year where volatility is certainly going to be in people's favor that like to trade stocks, because stocks are going to be all over the board this year. We had such a nice, calm year last year with very, very small declines, very tepid moves in markets. We got very complacent with that. It's like, oh, this is easy. I just throw money in the markets and things go up. This is not going to be that year. But again, and then don't forget, we also have midterms coming up later this year as well. So, we've got all kinds of stuff that is going to apply pressure to markets this year. So again, volatility is going to be your friend or your enemy this year, however you want to look at it. But it's just what we're going to have to live with and we're going to have to navigate with. And that doesn't mean we can't make money with it at the same time. Be right back after the break.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
FAFSA. It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. Realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. RealInvestmentAdvice.com. Click on the insurance tab.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I personally don't have a lot of sympathy for professional athletes when they complain about working conditions or whatever. It's like, you get paid $50 million a year to throw a leather ball down a field. I mean,
to play sports.
You've got very little to complain about.
The Real Investment Show podcast. Same show, your schedule.
You make a bad play, people are harassing you for the next 10 years.
At realinvestmentadvice.com.
Like I said, I just don't have a lot of sympathy.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual lunch and learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So just kind of going through a few things this morning with, respect to Russia. And I don't want to I'm not dismissing the risk that Russia poses on the global economy, global markets. Look, the last time that we saw the Russian ruble collapse to this degree was when long-term capital management failed back in 1998. So there is implications to markets. I'm not dismissing that at all, which is why we've been adding a short position and reducing equity risk and adding bonds and these type of things just in case, right? You don't drive without a seatbelt just in case. I mean, you can. It's not really wise, but, you can. And you can run your portfolio without being defensive. You can do that. But there's a risk, right? If we go back to 1997, Asian contagion, it affected markets. These things happen. Right now, if you live in Russia, this is, one of the, we talked a lot about in the past about hyperinflation and what causes hyperinflation. Hyperinflation is not a function of just prices going up because we had a lot of liquidity thrown into the markets over a couple of years, and that caused people to run out and buy a lot of stuff. At the same time, the economy shut down. Yeah, that creates inflation. Hyperinflation occurs when there is a loss of confidence within a country's ability to service its debts, a loss of faith in the currency itself, and that usually results from war, and particularly losing a war. Weimar Germany is a good example of this after World War I. the important thing about this morning, and over the weekend, Russian citizens were told, hey, if you want to go to the bank and withdraw money, you can take out $20. Well, $20 doesn't do a whole lot of good for you when that $20 bill is worth half because of the currency collapse. That's what leads to true hyperinflation. And that leads to a lot of other problems economically, obviously. And that's, so when people talk about hyperinflation, it's always important to remember what causes actual hyperinflation. It's losing a war. It's defaulting on your debt. It is an inability to create opportunity. In other words, people lose faith in your country. They don't want to do business with you. That's what causes hyperinflation. What we have currently in the U.S. is not hyperinflation. It's not a threat of hyperinflation. It is simply a function of too much money chasing too few goods. I've got an article coming out I'm writing right now, but Milton Friedman once famously quipped, he says that money is always and everywhere, inflation is always and everywhere a monetary phenomenon. Government unions don't cause it. Greedy corporations don't cause it. Spendthrift consumers don't cause inflation. Only governments. Because they're the ones that control the printing press. You print too much money, you get inflation. We printed $5 trillion worth of money and had no ability to increase production because businesses were shut down. Not surprisingly, too much money, too few goods. You have inflation. That's now reversing. So importantly is not to start making decisions on your portfolio based on the function that you think you're going to have inflation for the next 10 years. You're not. Inflation will be back to 2% by next year. So if you go from 7% to 2%, that is deflation, or disinflation, I should say, to be technically correct. And that is going to change the dynamic on markets, economy, and commodities. So be aware of that. As we talk about these things, there's a lot of things going on in Russia. And there's a lot of things happening and that are going to continue to weigh on markets. And it's just going to create a lot more volatility. Again, markets are down this morning, not down as much as was expected earlier this morning. They are recovering a bit here. Still down. S&P is going to be down about 43 points. Dow's down about 294 right now. We're down 500 this morning, almost 600. So I've recovered about half their losses so far. But British Petroleum has decided to take a hit of as much as $25 billion to leave Russia. They have a stake in Rosneft, and they are basically liquidating that stake. BP may regret that decision at some point, but this is their first reaction. Russia's bond market is collapsing because now, with the inability to service debt, lack of SWIFT, etc., people are concerned about default risk. So bond prices are collapsing. The ruble is collapsing. Russians are lined up at cash machines around the country trying to get money out. They're just trying to get their money out of the banking system so they have access to it. And this is kind of similar to what we saw in Weimar Germany. In Weimar Germany, people would take their paycheck, immediately cash it, give it to their wife to go buy bread because bread was going up so fast in price that if they waited around, their paycheck wouldn't cover a loaf of bread. This is where, the old sayings about a wheelbarrow full of money to buy a loaf of bread come from, because that's what was happening. It's interesting. As you look at, the Russian stock market is collapsing here. They've suspended trading on the Russian exchanges. Interest rates are up to 20% now. This is very bad economically for Russia. And then again, for a dictator, this isn't a great position to be in. You better have very good control of your population and a lot of popular support for your actions if you're going to put them through this kind of economic anguish, which is happening. So, if you don't have a large support from your population for this type of action and the type of pain you're inflicting on them, that you run the risk of being deposed. That's the challenge of being a dictator. In a decision to exclude Russian banks from the SWIFT messaging system, again, that's the thing that results on mispayments on debts. Again, that's the risk we were talking about in the last segment relating to that potential of the Lehman type event where banks just stop doing business entirely with other banks because they've got assets. And don't be mistaken, Russia's a huge country. Every bank in the world has assets invested in Russia. Hedge funds, banks, investment banks, investors have assets invested in Russia. So don't make a mistake here that, it's just Russia. There's a lot of impact globally because of what's happening in Russia. So these are all the things that, Putin put his nuclear forces on high alert. And, it's important to remember there's tactical and strategic nukes. Tactical nukes are very low yield, target specific. Strategic nukes are for taking out entire cities. This is the tactical nuke side of his forces that he's put on high alert. Again, more of just saber rattling than anything else. But again, nonetheless, it is certainly concerning. Now, they're having some talks. The hope is this will lead to the beginning stages of some type of resolution. And will we start to find out exactly what the hell does he want? That's the real question at this point for, I think, world leaders. What is it exactly do you want? You're doing this action because you want something. What is it exactly? And so these talks will give us some clues, most likely, as to what it is exactly that he wants. Is it just the fact he doesn't want the Ukraine to be part of NATO, as we talked about previously? The problem with his actions is now it's united everybody to now put Ukraine in NATO and kick Russia out. So, this may all entirely backfire on Russia at some point. We'll see. But these are all the things. I mean, again, the list of things potentially that can go wrong for markets is certainly staggering. And I don't want to dismiss those risks at all, but I also want to temper you with the idea of making large, emotionally driven, charged decisions about your investment portfolios and making what we call a one-sided bet, going all in one direction, because that typically winds up being the worst outcome more often than not. If it's emotionally driven, you generally make the wrong decisions. You might feel like you're right for a while, but ultimately you wind up being on the wrong side of the trade. This too shall pass. And then we have the Fed. But the point here is I just want you to keep this all into focus. Again, as we look at all these different issues, and there's a ton of them, right? There's tons of impacts. The interlinkages between banks and countries and financial systems and markets are all very delicately interwoven. And one small ripple in one place has a large effect somewhere else. And we don't know what those are. And we won't know until one morning we potentially wake up and go, oh my gosh, this has happened. That's why we're hedging. That's why we're reducing equity risk. That's why we're adding bonds to our portfolio, to hedge against those potential risks. But what happens just in case tomorrow we wake up and this is all resolved? And markets are up 4 or 5% in 2 days, and you're sitting all in cash. See, those are the things that we have to prepare for and what we have to work through as investors. And it's not easy, right? This is why Mike and I and everybody at our shop, we spend 18 hours a day working on this when we're not sleeping. Right? That's all we do is focus on these type of events and issues. And this is why it's hard to manage your own money in this type of environment. But, just pay attention to technicals. Be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
FAFSA. It's FAFSA season, that crucial time of the year when thousands of dollars in financial aid for your college-bound scholar are at stake. Our next free virtual Lunch and Learn will help you avoid making costly mistakes on the free application for financial student aid, the FAFSA. Thursday, March 10th at noon. Register now at realinvestmentadvice.com for our next Lunch and Learn on college planning and dealing with FAFSA season. realinvestmentadvice.com.
Anyone can sell you insurance, and they'll gladly take your premium dollars. The RIA Insurance Agency can provide you with insurance solutions tailor-made for your needs and lifestyle. Because everyone's assets are different, let RIA Insurance review what you need to protect and how. We won't sell you insurance, but what you need will be a matter of policy. RIA Insurance Agency. 888-915-0780. 888-915-0780. realinvestmentadvice.com. Click on the insurance tab.
What worries you about your money? Enhance your financial success with RIA Advisor's free financial planning tool, MyBlocks. It's our online modular manager for your money and your life. Does your vision of retirement match up to reality? MyBlocks can help to determine how much you'll need and how you can achieve. Create your own personal financial vision for the next decade with MyBlocks, our free tool at RIAadvisors.com. Click on the Client Portal tab, RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. So, quick sideline here for a second, because over the weekend, of course, there were plenty of headlines out. Ukraine has now removed the age limits for joining the military. It was 18 to 60. They've removed all age limits to join the military. They say basically just show up with your passport. Oh, you have to have an ID to fight. Not to vote, but to fight, you got to have an ID. Just joking. But it does bring up an interesting point here, because, you know, this is the crux of the gun control argument that occurs. And, you know, it's interesting because I posted a graphic a while back on my Twitter account, and it says, how many guns do you own? And it said most Americans, they own between 0 and 1, like 1 and 3, and it had the percentages. And like 25% of Americans own more than 5 guns. And so I made this comment on Twitter that said, I guess I'm in the 25% bracket. And of course, it didn't take long before I got emails from people going, why do you own so many guns? It's like, well, you know, because. In Ukraine, they're literally handing out machine guns to everybody that is willing to fight. This is why you own guns. Because this is why when something goes wrong, you better be able to defend yourself, right? Your family, your homestead, etc. And this is what Ukrainians are finding out firsthand. And that was the intention of the Second Amendment to start with. But it's just interesting that we get there. And, you know, and ready.gov over the weekend released instructions in case of nuclear blast. Get inside the nearest building to avoid radiation. Brick and concrete are best. Remove contaminated clothing and wipe off or wash unprotected skin. If you're outside after fallout has arrived, this is important. Hand sanitizer does not protect against fallout. Do avoid touching your eyes, nose, and mouth, and if possible, do not use disinfectant wipes on your skin. Good advice for nuclear fallout. But here's the most important advice that you should have in the event of nuclear fallout from ready.gov. Go to the basement in the middle of the building. Stay away from the outer walls or roof. Most importantly, try to maintain a distance of at least 6 feet between yourself and people who are not part of your household. And if possible, wear a mask if you're sheltering with people who are not part of your household. So in the middle of ready.gov, we now have COVID masking restrictions against nuclear fallout. I'll tell you one thing. If I'm in the middle of a nuclear blast, it's going to be me on top of my kids and my wife and everybody else huddled up in a corner somewhere, yeah?
It just never ends, does it?
It's just, I mean, really. I mean, I want to know who the guy was. What happened is that this was in some other document. He just clipped it and stuck it in here, right?
Copy and paste.
Yeah, exactly. So just this is from FEMA, by the way. These are FEMA instructions against, in case of nuclear explosion. I'm sure this is helpful. Anyway, can't make this stuff up.
Do we have to duck and cover?
No, it really doesn't matter. I mean, honestly, if you're in the middle of a nuclear blast, that's it. Yeah, pray. That's, there's some things you can do, but mostly just pray. I was watching Greenland last night.
Mm-hmm.
Have you seen that movie?
I have not.
Okay, so Greenland's this movie about a big asteroid hits the planet.
Yeah.
And so of course, it's a extinction level event that occurs. So everybody's trying to get to shelter in bunkers. And they're talking about what happens. There's going to be 3-mile high waves that come from the impact that's going to basically flood everything, to Montana. 900 degree winds traveling faster than the speed of sound. So, there's not much that survives it. It's kind of like a nuclear blast.
Yeah.
There's just not much that survives it. I'm not sure masking and social distancing really work to provide you a lot of comfort in that environment. But FEMA says
your middle name becomes vaporized.
Pretty much. It's interesting right now. They're talking about these sanctions, and they've applied sanctions directly to Putin and the 30 oligarchs in Russia, which have all the money. And this is the important thing. I was thinking about this over the weekend. We have the technology to track down where all of his money is, right? We've got all these hackers. Anonymous has been doing all kinds of hacking over the weekend. They've hacked military jets. They've done all kinds of stuff to try to impede the progress of Russia at this point. So, good for you. But we have the technology to track down where all these assets are, right? They're not that hidden. They're not completely hidden. They're hard to find, but they can be found. I'm sitting there saying, why don't we put our crack team of NSA, CIA guys on task here, go find all of Putin's assets and take them, right? And say, look, I've got all your assets. If you want them back, stop what you're doing. One way to get to anybody is to take their money away from them. Same thing for the 30 oligarchs. If you want to get rid of a dictator, take away the money of the people behind the dictator, and they will pretty much get rid of the dictator to get their money back. And so what you do is you say, look, you withdraw from the Ukraine, we'll give you your money back. And then once they withdraw from the Ukraine, you say, I tell you what, I changed my mind. I'm going to give you half your money back because the other half is going to go to rebuild Ukraine. Maybe you think twice next time. But this is going to be there's an article out this morning talking about Putin's hidden billions in wealth. And they're saying that defangs all these financial sanctions. How much hidden wealth does Russian President, I'm reading from the article, Russian Vladimir Putin actually hold? Before 2016, the personal wealth of the Russian leader was shrouded in mystery, but a series of leaks from inside the law firms and banks that dominate offshore finance. Now, there's a very interesting show on Netflix called The Panama Papers that talks about the Panamanian law firm that housed all kinds of offshore accounts from everybody from Hillary Clinton to the Clinton Foundation to Vladimir Putin, and offshore wealth that was hidden from public disclosure, including, and again, this is from those Panama Papers and the Pandora Papers, which was another set of releases of these secret documents in October 2021 that offered some clues that President Putin's vast wealth stretches well beyond Russia's border. The only problem is that since most of this hidden wealth is officially registered in the names of others, often close friends or even former lovers of the president, whom he's known for years, it makes it difficult for U.S. sanctions to be effective. Doesn't mean we can't find them, and doesn't mean we can't go get them. But it does make sanctions a bit more difficult. Officially, Putin earns about $140,000 a year. Of course, that's a lot less now that the ruble has collapsed. And owns a modest apartment in Moscow, but several assets believed to belong to the Russian president include a yacht known as Putin's yacht and a massive billion-dollar dacha on the Black Sea known as Putin's Palace have now been widely publicized. It's estimated that he's worth, well in excess of multi-billions of dollars in terms of his total net worth. And not surprising, particularly when you start going through, it's kind of like Saddam Hussein had, just millions and millions and billions of dollars of wealth that was just kind of stashed everywhere, bunkers, etc., gold bars. It's there. It's findable. Just a question of going about doing it. Anyway, so as we get ready to wrap up the show this morning, again, futures are improving. We're only down about 270. Oh, we're only down. We're only down 279 this morning. Again, much better than we were earlier when we were down almost 600 last night as the sanctions were put into place and the removal of Russia from SWIFT. 2-year yield is falling this morning. 10-year treasuries down to 1.92. So bonds are going to perform well today. Bitcoin actually rising here a bit this morning as well. Oil prices up about 3.8% this morning. Brent up about 2.7%. Again, that doesn't get you back to where you were, but again, oil prices are going to be up this morning. And of course, we'll see how the day plays out. Does this initial kind of sell-off get bought and stocks kind of rally, or do we kind of have this initial sell-off and then we go lower today? Don't know. We had 2 very strong days last week, a lot of short covering, driving the markets higher on Thursday and Friday. A bit of a pullback today won't be surprising. The question is can it remain a controlled pullback, or is this a liquidation type event today? We'll see once the market opens. And of course, we'll update you as needed tomorrow when we get back here on the show. But again, if you have any questions or comments, get by the website. I've got an article out this morning talking about a March rally. We've had 2 negative months in the markets, a very long stretch of selling here. And March tends to be one of the stronger months of the year, particularly when that month follows 2 negative months preceding that, which has very rarely happened in history. So again, there's a lot of things that are kind of building up for March that says markets could perform better this coming month just from a technical basis. And again, any resolution that we get on the Ukrainian front will certainly also benefit markets, particularly if that resolution is combined with a more dovish Fed who kind of backs off that 50 basis point hike. There's a real potential here. There's a lot of negative sentiment in the markets that could lead to a fairly sharp reflexive rally. Doesn't mean we're out of the woods by any stretch of the imagination, but there's some decent upside in the markets from these current levels if we get any type of good news at all. So again, this is one of the reasons why you want to be careful getting too negative, particularly at this stage of the game, because we're already so far into this and markets price these things in and markets adjust for these things fairly quickly and start looking for the more optimistic side of these outcomes. All right, wraps up the show for the day. I'll have 3 minutes on markets and money. We'll go through commodities and gold and markets this morning. That'll be out here just in a little bit. All on the website, of course, along with our latest blog post. Our newsletter is out as well. It's on the website to help you manage your money better, help you do the right things with your money, of course. realinvestmentadvice.com. That's realinvestmentadvice.com. See you back here tomorrow.
Money, always Sunday, in a rich man's world. All the things I could do if I had a little money. It's a rich man's world. It's a rich man's world.